So
3, 2, 1. Yeah, baby.
Okay, are we live? Can somebody check YouTube?
Yeah, we're there.
All right.
We're there.
4, 3, 2, 1. Take it.
Hey, everybody. My name is Bobby Atkins. We have Paul McNeal here and Brian Swanee coming at you with our first YouTube episode. Woohoo! You get a holla. But anyway, so we're coming at this channel with trying to bring a different perspective. I'll let everyone kind of, since this is our first episode, give a little quick introduction on their backgrounds and etc. But our goal here with this channel is really, the title of it is support and resistance. So we want to provide an objective analysis from a fundamental standpoint and also technical analysis on, what's happening in the market. Where are the supports located at? Where are the resistances? And how does that translate more importantly into the charts? Because at the end of the day, a lot of us are traders here, right? So we want to provide, the facts in an objective way. We are Bitcoin fans, but I wouldn't call us Bitcoin maximalists. So we're going to cover, the other cryptocurrencies as well. And if you guys have specific, coins that we're not covering in this live chat, make sure you hit it up in the chat window. We have a couple people monitoring that, so we'll maybe have an opportunity to look at those charts live with you and give you our thoughts. But with that, Paul, do you want to kind of just give a quick 60-second background on your life and what brought you to cryptos and go from there?
Yeah, absolutely. Hey, everybody. As most of you probably already know me, Paul McNeal. I'm the crypto curator. I've been doing this for a while. I actually came across Bitcoin back in like 2011. But before the world of Bitcoin, I actually served in the United States Navy. I was in submarines, so you can call me SpongeBob. I lived under the sea. I did that for about 10 years. Really enjoyed it, loved it, had a lot of fun. That took me into the government, and I worked in the government for a while until I started my own business with a friend of mine, and we did news curation. Surprise! And that's sort of what I do. And so we used to curate news information for most of the leaders up on in Congress, Capitol Hill, part of the White House, and Fortune 500 companies. Went through a bunch of other stuff before, like I said, getting myself involved in crypto. And now that I'm here, I'm absolutely loving it, having a blast.
Awesome. Where's your SpongeBob outfit?
I didn't bring it with me today. Next
Stay tuned for episode 2.
That's right. I'll surprise you.
All right, Brian, do you want to take the next?
No. I actually just gave a conversation on the bullpen last night with Lyndon, and it was a good time. So I get to explain who I am again. This is cool. Really, I come from a commodities background. I grew up outside of Chicago on the Indiana side. Watched people trade in the pits, and I've always had commodities in my blood. Went the finance route. Graduated with finance degree. I jumped into a really cool job to start off right out of college. I started trading cattle and grains in the futures market for a cattle, brokerage firm, one of the largest in the States. But the cool thing about it, it was a small company. So there's about 25 people. So I got to trade everything. They opened up accounts for me. So I had all these discretionary accounts to trade all this different stuff. So for about 6 years there, I learned all the TA and technical analysis, behavioral analysis, Fibonacci's, hence the Fibbo Swanee name on Twitter. I've done that. And then after 6 years of kind of sinking and swimming and trying to figure everything out, went to the energy side where I'm still currently working, and I've been there 15 years at an energy consulting firm where I'm the senior commodity analyst there. So I actually get to draw charts for a living, and I love it. My passion's TA, and I wouldn't change it for the world. So got into crypto because I can apply my expertise there and want to basically volunteer my time to help out others with charts. So that's me.
And there's a lot of expertise that's needed in this industry, right?
Yes, we are finding that out.
You ever trade on the CME or anything? Do you trade in the pits over there?
I never had a pit license because you had to have a license to be a pit trader. But I actually I could sit right outside the pit. They wouldn't allow me in the pit. So it was the weirdest thing because I would sit outside the pit and I would have to pick up the telephone and call the person sitting right next to me to put the order into the pit because I wasn't allowed to put it directly into the pit. It was the craziest thing. But yeah, no, I got to go down there every once in a while. I worked here in Louisville, but every once in a while I would go up to the CME on trips and work there. But I never had a floor license, so it would have been cool to, to get on the floor and start ripping papers at people and all that. But never got to do that. But it was pretty cool to be outside of it, though.
It looks a lot different now, right? It's all computerized.
Yeah, it's all different. It was just at the time where there was one little computer in the corner that would spit out a little paper, and then people would take it and then go into the pit with it. So it was just on the edge of that. And a few years later, everyone's fired, get out. Computers are taking over.
Right. It's crazy. Yeah, there's a good documentary actually on Netflix. I think it's called The Pit that highlights it highlights the whole era, right, of kind of the height of the pit trading at the CME.
Yeah, I haven't seen it. I'll have to check it out.
Yeah, and the story revolves around, I think, 5 maybe main characters, and it's almost depressing a little bit just because you see the ramifications of technology and that effect. So
I can see that.
It really affected people who, lived for that adrenaline and lived to be in the pit, right? And
no, I saw people just own people in the pit.
Right.
They'd be buying things and selling things not even close to where the price was on the chart. I mean, it's crazy because they would get them all flustered and like, oh my gosh, what am I going to do?
You got to be physical down there too.
Yeah. Oh yeah. No, it got a little rough.
My little.
All right. So your turn. Who's Bobby?
Yeah. Who am I? So I've been working in the financial services industry for 15 years now. I've been trading full-time in cryptos, managing my own stack for the last 2 years. Prior to that, graduated with an accounting degree, got an accounting internship, quickly found out public accounting was not the way I wanted to go. And got my first job at Principal Global Investors in more kind of back office operations, learning fund accounting, trade support, data management, like all the necessary things that you don't realize that a bank is really reliant on in order for it to be able to do what it's supposed to do, which is managing money and trading, right? So I was kind of more learning the back office kind of structure and all the systems and how that works, and slowly just kind of worked my way up the ladder. So I had a really exciting opportunity to go to Singapore from 2007 to 2009. And at the time, Asia, during that period, a lot of the US-based companies, investment firms were eyeing, the China market, and Singapore was a very good launching pad because from a regulatory standpoint, they were very friendly for foreign investments to come in. Now, the thing is, if you wanted to list any mutual funds or anything like that, products in the Singapore market, the law states that you have to have an office, you have to have a certain number of people there, you have to have certain types of positions within that office, and you have to set up like custodial relationships and all this like operational things that needs to be satisfied from a regulatory standpoint. But it was a key market for us at the time when I was working for PGI, obviously, because China was really booming, and there were new millionaires and billionaires being printed left and right. So we wanted to get into that market as quickly as possible. So that was a very eye-opening experience, just how complex global banking operations are from like a regulatory standpoint, and just getting systems to connect and getting trade flows, connected from one office, from one region to the next. So that was really cool.
How did you go from that to crypto?
Yeah, so
I mean, that's kind of a unique environment to be in, and all of a sudden go to crypto.
Right. So Asia is one of these just progressive areas of the world, right? And I was seeing things just from a technology standpoint, from like a mobile cell phone standpoint, messaging standpoint, payments were already happening like over like mobile, cellular. So all that kind of stuff was already there before it got here to the US. So, you heard of early buzzes of blockchain and things like that. And so I actually left Singapore and I went to go work for a company called UBS, which is one of the largest wealth management companies in the world. Came to Chicago for that position, and you kept hearing this like blockchain buzzword going throughout the company. Honestly, like on our intranet, every week, someone would be, there would be a new blockchain like kind of highlight news article that was just private to all of us at the time. I never clicked on it because, it didn't blockchain, like it didn't really excite me. I didn't really, it didn't seem interesting at the time. But what's funny is, so a few years later, I heard the buzzword really happening. It was really coming around, this blockchain. I didn't even know anything about cryptos. This is 2015 now. And I was Googling blockchain companies because I wanted to invest. I wanted to try to find a blockchain public company and possibly invest some stock into it. And at the time, there was absolutely nothing, but this Bitcoin thing kept coming up. Every time I was Googling blockchain, Bitcoin would come up. Possibly invest some stock. And then I finally, learned. That's how I learned about Bitcoin, was in late 2015, early 2016. And
that's about when I started too, about 2016.
Yeah. And so I think like everyone else, I read the white paper and I was just hooked, like from the get-go, and the excitement in the industry. And it was like this kind of underground, kind of weird, non-fiat cash or whatever that was being passed around, and the whole technology just really kind of just captivated me. So I wasn't an investor yet. I didn't trade it yet, but I definitely followed it. So that's kind of full circle. Long story short, that's kind of how I got into Bitcoin, was just Googling blockchain because I kept seeing that buzzword at work. And anyway, I decided in early 2017, because I had a TA background. I kind of skipped that. I worked for a financial services company in between there, where I learned technical analysis and a lot of the tools that traders use to monitor markets, not just from a news and quote standpoint, but chart analysis and stuff like that. And I decided in early 2017 to go for it. I left UBS and I went to full-time trading, my own stack. So been there ever since.
Cool.
Nice.
Cool.
Okay. But anyway, so I guess, for those that are watching, it looks like there's at least a couple people watching live right now, maybe. The way we're kind of just structuring this channel is, it's almost like we want just almost have it be like conversational piece, not super rigid, and just go from flow from one topic to the next, and we'll just kind of see how this works out. But Paul, I think we should hit up fundamentals.
Sure. First, there's a couple of news articles of the week that I sort of, outlined. And I just have to say this because it's been said on Twitter, and I know for a fact that Jack talked about it. I mean, not Jack. I'm calling him Jack. Marty talked about it from his show, and it was all about what Jack has said. And what surprises me is how the mainstream media, as well as all the other media outlets, are getting this completely wrong. Jack did not say he was buying $10,000 worth of crypto every week, but for some reason they did. As a matter of fact, you know what? I think I do.
Wasn't it something about Cash App or something? Like he hit his limit or something like that?
I'm going to play the clip and see if you guys can hear it. I'm going to see if this works. But see if this works.
Started the stacking stats Saturday. Using everybody buying $25 worth of Bitcoin.
I saw that on Twitter. All the screenshots. I thought that was awesome. I would have participated, but I already exceeded my limit on Cash App, so I couldn't purchase anymore. There's always
okay. So that's all he said. He said, "I've exceeded my limit. I can't purchase anymore." He didn't say a number or anything. And some kind of way, everybody came out saying it's ludicrous. So I thought that was quite funny. I thought it was hilarious.
Actually, if you play it backwards, it says, "I buy 10,000 every day." But you have to play it backwards. I mean,
right. But I think that something like that getting misconstrued will create a bull market run. It's like, where did it come from? Good old Jack stacking sats, baby.
Crazy.
So on the heels of that, the whole Coinbase drama, it's just hilarious. Again, Coinbase goes and buys this company, Neutrino, and all of a sudden the news comes up that some of the folks involved in Neutrino was part of the, revealing information about users. And then all of a sudden, everybody's delete Coinbase. But what happens after that? Coinbase comes out, apologizes, fire the guys from Neutrino. Everyone now loves Coinbase. It just baffles me, the entire crypto space sometimes. What happens?
I personally think that I'm tired of seeing Coinbase being reactive than proactive, in their business operations, and it's disheartening. And they should really take a playbook out of Binance, to be honest. That's an exchange where a lot of people are hating on the Binance coin for what it is, being kind of this like controversial kind of cryptocurrency, that's but from a business operation standpoint, they're very transparent on how they're running their business. They're also working on a decentralized exchange, providing that as a tool for the market if you don't like the centralization that these exchanges are creating, right? I don't know. Coinbase frustrates.
Yeah, two different companies, man.
Yeah.
I mean, Binance is playing under different rules.
That's true. They're not dealing with U.S. regulations either.
Yep, that's a big part of it.
Yeah,
that's why I'm not a big fan of Coinbase, but I mean, I'm not going to slam them. I'm too bad, but I agree with you. I mean, I think they're just playing on a different playbook. I mean, that's what it comes down to.
So, hold on, Brian, I got a question for you.
Yeah.
So you don't have to list what exchange you're trading on, but is it a U.S. based?
It's not Coinbase.
See, so my frustration as a trader is I would love to have more trading pairs, but I'm not willing to send a lot of money and assets to an overseas bank that I will not be protected under, FDIC regulations and.
Yeah, no, that makes sense. I mean, like,
but it's frustrating from my end because I want more trading pairs, obviously, right? So
yeah, I mean, I hold money in wallets, and I only send what I'm going to trade, and then I can always send back. So I'm not going to lay it all out there and just have it sitting out there. So
wait a minute. So isn't Kraken a U.S. company and they have a lot of pairs? Why not trade on Kraken?
I've had. I was scarred by them in 2017 and 2018. There was so much volatility happening in the later half of Q4 of 2017 and then Q1. And these exchanges couldn't handle the volume, right?
Right.
And so I was using Kraken. I had like 4 or 5 exchanges. And the reason I had so many exchanges is because I couldn't trust if one of them was going to fail or not. And Kraken was one of those exchanges that had a really crappy front end. I don't know how they are now, but
they're much better.
Is it better?
Yeah,
I mean, they're a lot better.
Yeah, I think Powell's doing it right. I mean, they have definitely changed for the better. I was not a fan of Kraken either because of that same reason. But now I look at them and I'm like, okay, yeah, I think they got their stuff together.
All right. They also had really strict withdrawal limits.
Yep. That
I kept constantly hitting. And then I would have to wait, weeks in order to get my money. Customer service was terrible. I'm sure a lot of this has gotten kind of figured out now that we're in this bear market. But anyway, I was dealing with that.
Yeah. So speaking of exchanges, Quadriga CX is next up on the list. So let me ask you guys: is he dead or is he alive?
He's pulling the biggest scam in the freaking world. I think he's alive. He's probably with freaking John McAfee out on his freaking boat. That's what I think, but I don't know. I'm just guessing.
Oh, okay. And he just left the wife back in Canada.
It's all part of the scam, man. It's all part of the scam.
I don't know. I'm just playing around, but I mean, I mean, if that is the case, I wouldn't be surprised. Put it that way.
Well, did you guys see that he was doing definitely some big time trading on BitMEX? They said that he was doing some huge leverage trades. I'm talking millions and millions of dollars on BitMEX.
Huh? No, I didn't hear about that.
Yeah, that's recent.
And they're missing millions and millions of dollars.
Oh, shoot.
So, what can you do? And of course, they ended out with the whole top news, Facebook privacy. Isn't it amazing what Facebook is trying to do now? They're trying to get in on this game, right?
Wait a minute. Facebook privacy. Is that kind of like an oxymoron?
I think so.
Okay. Okay. I want to make sure I was hearing you right.
The Zuckster's trying to get in on the blockchain game. You know what I'm saying? He's like, hey, if everybody's going to get a piece of this, I am too. No, they'll leave me out.
That's true. That's true.
Yeah. No, Facebook, it will be interesting to see what they come out with their stable coin and to see if they can truly. Now, according to, let me see who it was. I want to make sure I get the name right on this one. The Tagami co-founder believes JP Morgan and Facebook could push crypto mainstream. So, again, two projects that I know most people in crypto are not fans of. Could this possibly push us into mainstream? Could be.
I mean, I think for those of us that have really been in this market for a long time now, we can decipher between what's real and what's just maybe desperation. At this point, I feel like Facebook. They're taking. If you look at them just from fundamentally, they've had a really rough past year, right? In controversy around their platform and privacy and how the elections went and all that kind of stuff. And so, I can't tell if this is just like more of a publicity thing where they're just trying to save face a little bit or trying to, boost, share price, in a different kind of methodology. I don't know. But it seems odd, right? Because there's no way they're going to be able to implement the kind of privacy that we would want. Like the crypto guys have been in this for a long time. But for the mainstream people that are scared of Bitcoin or scared of, dealing with Monero or Zcash or some of these privacy coins and whether they're legitimate or not, I could actually see mainstream adopting this Facebook coin because they have the network effect and they have the comfort, and I don't think they prioritize privacy as much as like we do. But this could be a good launching pad into Bitcoin and other coins.
Yeah, no, I can see that. I got a guest speaker that thinks so. Mm-hmm. I don't know if you can see that or not, but Bart says Facebook rules, dude.
There it is. You've heard it officially.
I was just playing around. I just drew it up.
Yeah.
Yeah. So I got a few other, sort of top news articles that we can just quickly just comment on. One is the whole Kroger. Do you guys hear about the Kroger story?
I did. Yeah.
Yeah.
I think if Pump can get to Kroger and get Kroger using Lightning, that would be amazing, right? It would be shocking to see something like that happen.
Yeah, I mean, I would love for something like that to happen, but I just feel like, Kroger's probably just playing that pressure game against Visa to bring their fees down. That's what I'm guessing, because, it's not launching until April or so. It gives them a month to kind of switch around a little bit. I don't know. I'd like to see something come out of it, but, Visa is probably like getting a little pressure, and if they want to keep their business, they'll just reduce the fees.
Yeah, I still think it's one of these things. It's like Facebook and JP Morgan. I think it's one of these situations where, how do we revitalize the brand and make it sexy again? And how do we appeal maybe to the millennial generation? Because this is truly a millennial and Generation Z movement, right? Digital assets and creating digital scarcity. And so I think these are just companies that know that they're behind the ball and that they're looked at as old kind of institutions. And I don't know how serious they really, like from a business operation standpoint. You know, do you actually think Kroger is thinking that getting on Lightning and enabling Bitcoin payments is going to be something that is going to, you know, feed the bottom line at the end of the day?
No, that's why I think they're pressuring Visa.
It could be a move like that.
Yeah, and then I don't know. There's this whole thing too. I don't know how you guys feel about, you know, I don't view Bitcoin as. I mean, we can go into this later. Maybe I'm kind of digressing, but I just see Bitcoin as a digital. It's like digital gold, right? It's a digital scarcity, and the idea of people using it as payments is just odd in my mind. I don't know. I can't get that business plan around my head, because I would never go spend gold anywhere, right? And I'm not willing to use my gold for payments. I'll use Bitcoin Cash as payments because I view that as a different type of asset. But I don't know.
In due time, we'll figure that out.
Yeah, we'll figure that out.
Give it time.
So do you guys hear that Circle might IPO? That would be a big one, huh?
Yeah, I mean, I think so. I mean, that's definitely a mainstream, you know, entry. You know, doing an IPO like that.
Especially Goldman Sachs.
I don't know the details, but I mean, that's, you know, definitely mainstream news.
And they're backed by Goldman Sachs as well. So.
Yeah, I was gonna say the same thing. They're backed by Goldman Sachs. Of course, Barry Silbert has his hand in it too, right? Because he's got his hand in everything. But it will be interesting to see if something like that. Bitmain was going to be the first one to IPO. But of course, we know that might not necessarily come to pass too soon. But yeah, I think we're going to start seeing more of these crypto-based type companies go, you know, IPO. That will change, I think, dynamics a bit in the market.
Yeah, I think so.
Yeah.
Last two, so BlockFi, that was a very interesting one. I know that a lot of people have been talking about that. Their name seems to be trending a lot of places. A lot of people are definitely pushing that brand. But again, let me ask you guys, what do you think about handing your keys basically over to other companies to earn interest on it? Are we just, you know, going the opposite way of what crypto is supposed to be?
Yeah, that's a tough one for me. I'm the owner of my key. That's like, I like to be my own bank. So it's really hard for me as, you know, just personally, I don't know. I'm going to have a hard time giving my key over to anybody ever. So, but I mean, a lot more people might be comfortable in doing that. So
yeah, even at 7%, I mean, come on, you got to have a price, right? 18%, 20%, come on.
Yeah, those are percentages based on risk. But yeah, no, I mean, no, I think, I mean, it's a stepping stone, and I think it's a good idea to start bringing that in. I mean, some of the, you know, there's pros and cons to it. I mean,
right.
You know,
I think
one of them is the keys, and the other one, you know, I mean, I don't want to get into too much detail, but I mean, the loan to value ratio is only 50%, you know, and there's a lot of things in it that's kind of, it's a good stepping stone, but I think it's got a lot of room to grow as we move forward. But hey, somebody's got to start, and then we can build from it, right? So you got to give them credit for doing that.
That's true.
Yeah, I think you know, this is the transition that we're going to see over the next couple of years. Is as cryptos go more mainstream, as these traditional products that you normally have in, you know, the traditional markets coming into cryptos, right? And for someone like myself, and I think for a lot of people, you know, that it's great to be your own bank, but that also comes with risks, right? I mean, you lose your private keys, you mishandle that situation just a little bit, there it goes. And I think that scares people. I think there's going to be this middle ground. In order to get the masses to come over to our side, is they're willing to obviously give up privacy for really that concerned about privacy, they wouldn't be on Facebook and all these other platforms, right? And I just think people don't really care, you know. And so I think yeah, having products that look like, you know, traditional banking products will help people warm up to cryptos. and then maybe they'll be smart like Brian someday, where they're handling their own keys in the future. So
yeah, no, that's definitely a stepping stone for sure.
Yeah.
To get people as smart as me. No, I'm just kidding. No, just like the user adaptability. It's going to take a little while to get that a little bit user friendly.
Right. I think our cameraman went to sleep because I think it's on me constantly. But that being said, I think it might be time to do a little shout outs.
Oh, you want me to go? I got a shout out.
Yeah.
Is it on me? Can you guys see me?
I don't know. I gotta check and see. So like now it is. There we go.
There we go.
There you go.
I want to give a shout out to the Digital Den. This is a great place. It's a Discord channel where we got all walks of life there. I mean, we're if you're really into trading, investing, anything when it comes to the top 10 cryptos, or if you want to get into a lot of different altcoins, the knowledge base that we have in there, there's guys with experience as long as me that I'm learning from. I'm learning from people that have only been doing it for a couple of years because they have such a different look at things, which I think is awesome. So I'm hoping that they're learning from me as I help them out, and I'm learning from them. But the Digital Den is a great place to get out there and build a community if you want to trade altcoins, because we really take it pretty seriously. So you're not out there just, running coins all over the place and that kind of stuff. So I really highly recommend them. Actually, we'll put all their links and stuff out on the show thing, but the Digital Den, a couple of the guys that run that are brilliant. They know what they're doing. So come join me out there. I'm out there all the time. Actually, I'll probably be out there tonight at around 7 o'clock when the daily charts are flipping. So we'll get into some chats and figure out what the charts are saying and move from there. So the Digital Den, look them up. Look them up.
Ask questions, man. Like, especially when you're starting out, just learning to chart and just learning this ecosystem. Find those people on Twitter, and the good ones are there to help you. Ask any questions you have, even if they're stupid questions that or stupid. You might think they're stupid. Just ask away, and I think a lot of people are willing to help out on Twitter. It's pretty good. So,
absolutely.
Yeah. So for my shout out, I would say definitely check out Delphi Digital. These guys are absolutely amazing. I came across them in probably late last year, maybe a little or like middle of last year. But the team is composed of Kevin Kelly, Jan Lieberman, Meridio, I think that's the way you pronounce his name. Don't remember, get his last name, he's gonna kill me. Neil, and then Tom. But those 5 guys have been doing an amazing job producing reports. Their first report was on Bitcoin, 59 pages of hard-hitting facts. You definitely have to look it up. In addition to that, they just released their Ethereum report. And again, an equally well-done report, hard-hitting facts on both of those projects, something people should look for. They did a report on UTXOs that they said that the bottom was going to be in during Q1. Let's see if they're right. I think they could be. And if they are, they called it in a beautiful fashion because they called it back in early January. So again, Delphi Digital, great team that you should be aware of. We'll have their linked information. So definitely want to check them out. I think our camera's
yeah, I think the camera was on me. I should have lip synced while you were talking.
You should have. That'd been awesome.
I should have been like
sorry, it's all my fault. I'm still learning how this whole thing works. So
no, that's cool, man. We'll figure it out.
So am I supposed to give a shout out now? I don't know.
Yeah.
Hey, if you got somebody to shout out, you shout them out.
You know what? I guess it's a shout out. I'm gonna be taking everybody probably knows Leah Wald and Tyler Jenkins with Lucid Investments. They follow the kind of they've done a lot of market research and identifying hundreds of bubbles over history, not just in cryptos obviously, but just in all assets, equities, commodities, all sorts of markets. And they're offering webinars to learn Hyperwave. And essentially, I almost think of it as almost like this Elliott wave structure, but just in a very extreme sense, because you're looking at the bubble from 50,000 feet out, right? And you're drawing the different legs. And Hyperwave, I believe, follows a 7-leg pattern. And you know, they've studied a lot of different bubbles, and every single time the seventh leg retraces back to phase 1. And so if you apply that to Bitcoin and you apply their methodology, you know, the Bitcoin prices, we should be retracing back to like near $1,000. And they've studied 100 cases, and this has happened every single time. There hasn't been one case where this has not happened.
So is that why Leah is really confident on that bet that she made against I can't remember his name.
I can't remember his name either.
But isn't she the one that made that bet?
She is. Yeah. They made a bet that Bitcoin would hit $1,500 before it goes back to 6,500. So, I think they gave themselves like a $500 kind of cushion, right, from that $1,000 price. So, yeah. So it'll be really interesting. I'm going to take their webinar. I think it's the 23rd through the 24th of this month, just because I'm one of these nerds where I like to study. I like to learn. Like I bought CFA books without even planning on taking the CFA, just because, you know, I like learning, right? So I'm going to take their webinar, and I'll bring back some knowledge to you guys.
There you go. That'd be awesome.
Awesome. Well, hey, let's jump into a little bit of the curated TA. So when myself and Brian used to do our YouTube show, our SoundCloud show, we would talk about curated TA. And so I'm just going to sort of run through this, and then I'll sort of turn it over to you guys, and you guys can give your input and feedback to it. But the interesting thing I've found about technical analysis, if you look at it, look back on the week, you can determine who sort of make rights call and sort of what the tempo was, and you get to see the way the week progressed. So on Monday, for example, the price of Bitcoin was $3,712.38. And here's just some of the headlines that we were seeing on Monday. Another Bitcoin indicator signals price bottom may be forming. That was from Omkar Godbol from CoinDesk. Yuval Gall from Crypto Potato said, following an unusual stable week, Bitcoin has broken down to major support area. Nick Tong from NewsBTC said Bitcoin could collapse to $800 if the late 2018's plunge is mirrored, warned crypto analyst, is basically what it was. And then Martin Young from NewsBTC said crypto market wrap. He's talked about Monday starting another dump. On Monday, we have that $4 billion dump. So, of course, things were looking down. On Tuesday, the price actually moved up a little bit to $3,737.88. The NewsBTC staff talked about the weekly the MACD histogram being mostly bullish. It's been since Bitcoin price was over 13K. Benjamin Prius from Crypto Insider said Bitcoin price could be headed back down to the lows, which is a little bit of conflict there. But on Wednesday, the price had moved up again to $3,867.68. This time, the narrative around
that's because I was in the market buying like crazy.
the narrative there was Omko Godbo from CoinDesk again said Bitcoin's eyeing 4K after erasing Monday's price loss. Joshua Wilmot from CCN said 6 billion crypto surge. So we did a 4 billion dump, 6 billion surge, propels Bitcoin toward the key hurdle. And then FlipFib, which is the person who bet Leah, says bulls knocking at Bitcoin's 4,000 door. And Yuri from You Today also was talking about 4,000. So all of a sudden the sentiment now is looking at 4,000 strongly. Thursday, we did actually move down a little bit, only $10, 38.57. And Carlos from Use the Bitcoin was talking about Bitcoin could be headed towards 6,000 in the medium term. And Bobby Atkins, our friend here, he said, should we hodl today? A market update for Bitcoin prices. By today, the price was back up again, the 38.94, and Omkar Godbo says Bitcoin struggles to pass price hurdle, but the bullish outlook still intact. And Cole Peterson says analysts claim Bitcoin poised for move toward 4,400. So that gives you a look at the week and how things go. Nothing drastic, but we do see how quick Bitcoin can dump and pop in like a second.
Yeah, no, I mean, I was looking at a couple things in here, and like News BTC, they're using a MACD. To, kind of, it's just it's a very laggy indicator, so I'm not real fond of that one. But I mean, everything on here is making sense. It's hard for when people put a MACD on here and using that indicator as a forecast. Yeah, that makes me a little nervous. But not to put News BTC down on exactly that, but I'm just not a big fan of the MACD. But everything's in a nice range. But one thing that I do like is over the last, I think, 3 weeks, we've had some green candles on a week-over-week basis. So I'm kind of liking that. At least it's going in the right direction. But
yeah, I'm with you. I think it's, despite some of the FUD that we're seeing on Twitter and claims of going to 1,000, et cetera, I think from a trader standpoint, that's not what we worry about so much, right? We're looking at our indicators and we're analyzing the current momentum and in the market and recent price action, and everything on the weekly and monthly is telling us from a stochastic standpoint, RSI standpoint, that we're getting buy signals that are flagging on our indicators for the first time since 2015. So if you look at the monthly chart, we're getting buy signals on our stochastic that we haven't seen since we got out of the bear market in 2015. So that's a great thing from a momentum standpoint.
Yeah, no doubt.
But yeah, I agree with you. I think looking at MACD, I think those lagging indicators, those are great on more of a macro picture. So you can compare cycles and over time, but from a trader standpoint, it doesn't really give you good indications on entry.
Yeah, it just makes me nervous when they're making a $4,000 call off of a lagged indicator.
Right.
But I mean, no big deal. I'm just kind of pointing that out. It's just not a big fan. But I do want to show a chart real quick. Kind of give a little. I don't know if it's a lesson or not. See if I can share my screen. This is the first time, people, for this. So if it screws up, sorry. But I'm going to try it here. All right. Let's see here. Can you see my screen?
Yes, we can.
Sweet. I am technologically advanced. All right. Weekly chart. I mean, people have been talking about the 200-day moving average and the 200-day exponential moving average. We have the exponential moving average here on the red here, and then we got the simple moving average on the blue. Both of these are kind of support and resistance. Our show, we want to kind of talk about what's going on in the markets here. But this, the 200-day moving average or 200-week moving average here is the support. And what I like to look at when we're talking about support or resistance is both of these lines on here is it's like trench warfare. I always like to use that analogy. There's a whole bunch of buyers that are sitting on that 200-week moving average that are just sitting there and they want to hold that line. But then again, on the red 200 exponential moving average, you got a whole bunch of sellers that are sitting on that line. And right now they're battling back and forth. I mean, basically this whole area in between here it's like a battlefield. And I know Bobby on some of his charts was saying it's kind of a dead zone. And I kind of agree, because I guarantee you, with all the buying and selling that's going on, bouncing around between these two lines, there's dead bodies laying all over the place. People are getting eaten up. So what I like to look at is, if I'm a buyer and I'm a general, right? And I got all my troops that are sitting in this trench. Every once in a while, I'll throw a few out there, and say, hey, go out there and test the waters. And, they get killed. That's what happens. It's like, kind of collateral damage. You got to kind of figure it out, right? Well, the same thing's going on the other side. Well, what we do is we're taking these indicators and we're trying to figure out which soldiers are getting in there and which ones have more strength to break through one of those trenches. Either the buyers are going to win and they're going to push through that red 200 exponential moving average, and then all of a sudden we're going to start taking off to the upside because the strength of the buyers are starting to get stronger and stronger. That's what I'm starting to see in the indicators on a week-over-week basis. It's not super strong, but they are starting to get a little bit of strength behind them. Now, if it works its way down and it gets to that bottom trench and the sellers take over, then boom, you know, they're going to retreat out of that hole and they're going to have to redig somewhere else. And most likely, if it breaks that 200-week moving or the exponential moving average, we're talking probably a dump all the way back down to 1800 if that breaks. Let's just hope that there's enough buying strength to hold that line. And then on the flip side of it, if it breaks to the upside and the buyers start taking off above that line, I mean, we're probably talking 6,000 as a minimum target going the other direction. Because if you're a seller on that line and the buyers take over, you're going to jump out of the trench and go redig somewhere else. And it will probably be up around that 6,000 level. So I know it's a simple chart to look at, but there's a lot of information on those two moving averages with what's going on right now in this market with this period of consolidation. But we will break out of it one way or the other. Right now, I'm leaning toward the upside. And I have been since Christmas Eve when I first bought and told everybody else to buy. So stay with me. So far, the indicators are not flipping yet, but when they will, I'll definitely tell you because that's what I'm here for. But right now, I still like where we're headed.
So do you anticipate a pretty massive short squeeze event happening if we break out of the EMA 200 possibly? Because on the flip side, you know, I agree with you. I think that 200-week moving average is our last line of defense. You know, and if we have a daily close below the 200-week, and it's just not like a quick wick, you know, where we wick down and then move back up, but we're actually struggling to get back over the 200-week moving average again, that's not going to be good because there's a lot of air between that and going back to, you know, really low levels, like you said. Yeah, on the flip side, I'm wondering if, you know, if we do break out of the EMA 200, if that's going to be a short squeeze event, possibly. So.
Yeah, I can see that happening. But I mean, I just think, you know, you get this, you know, a little bit of bump above this red area. There's nowhere to hang your hat.
We're missing
here. Oh, what now?
We're missing your chart.
Oh, did it go away?
It did. But we're looking at your face, so I don't know.
Okay. How about now?
Yep, we see it.
Yeah, no, I'm just saying, like, well, the way I'm looking at this is, you know, you break above this line and, you know, take the psychology of the market. If you're a seller on that line and all of a sudden you got taken out, and then all of a sudden it's starting to go against you, you know, anybody that's short in the market, it's going to say, okay, I got to get out of here. I got to get out. But when you look at this area right in here, there's really nowhere to hang your hat. Like, I don't know where to sell this market anywhere until it gets back up, just, I mean, just draw the trend line right here. Whoop, like right there. I mean, this is the area right here where the sellers are probably going to hang their hat. So if this breaks, we got this whole area. I think it's going to shoot up nicely once it gets going, because once that happens, you're going to get the volume of the buyers that are going to come into the market. You're also going to get the people that are going to be unloading their shorts on the buy side, and then you'll get a little bit of impetus going that direction. Right. And then vice versa. If it breaks down here, I mean, same kind of deal. Breaks this level, I mean, there's nowhere to hang your hat until it gets down to this previous low, which is around 1,800. So one way or the other, we're going to 6,000 or 1,800. But right now I'm still leaning toward the 6,000 because the indicators are still kind of working that direction. So as long as the indicators are there, I don't care what CT and everybody else out there is talking about on Twitter. I want to know what people are doing in the actual markets and moving that price. And right now the indicators are still leaning toward an upside. So I'm sticking to my guns there.
Hey, I like that.
So I'm on the side of, what's the guy's name that bet Leah? What's the
Flip?
Yeah. See, what'll happen to him is they'll get up to here and it'll be like 6,300, and then it'll stop and then it'll drop right back down, and then he'll get screwed. but I'm not. I mean, I hope not. I hope it keeps going. But
right.
But that's
But I mean, that's what we do as traders, right? We're just managing. It's all about, we're risk managers at the end of the day, right?
Yeah. Oh yeah, absolutely.
And so I think there's this misconception sometimes that, you know, we're gamblers, but at the end of the day, we're just managing probabilities and placing.
Yeah, and not so much risk management. I mean, risk management's important. It's really emotion management. It's helping people not get so emotional and do crazy things when they shouldn't be. But
The markets will quickly teach you.
I think the camera's on me again.
Oh,
I know I'm really sexy and beautiful, but I'm sure they're going to want to see some other things too.
I thought maybe you have another chart to show. But anyway, can we flip over, since we're looking kind of macro level on your chart, I want to show a chart on my side real quick.
Sure.
That kind of speaks to that.
Yeah, go for it.
If I know how to share. Let's see here.
Dun it, dun it. I'm just waiting for the whole thing to just go down.
I don't have the 3 dots. Where's the 3 dots to share your screen?
Oh, it's not the 3 dots. It's only.
It's over on the left.
I got it.
Yep.
Relax. All right, here we go. So this is just, kind of another macro view. This is a report I published kind of recently on TradingView, just looking at comparing the 2015 recovery to our current recovery. And, this highlighted phase here on the chart, I call it the desert crossing phase. And you have this in every recovery, right? Of any market that you're looking at, where the desert crossing phase is this period where you have low volatility, low volume. It's this period of uncertainty and anxiety, and people have no idea kind of where the market is headed, and it always comes off after a major capitulation phase, right? You enter this consolidation period. Now, what's really interesting when you look at the 2015 situation is, so this is the 200 week, the pink line is your EMA 200 week, and the blue is your simple moving average.
The two that I showed on mine.
Exactly, yeah.
Yep.
So in 2015, what's really interesting is we have that capitulation candle here, where the market spiked. The market spiked way down, and then it reversed back up in one wick. And this is the price action that the bears are kind of wanting right now. So all of the people that say the bottom isn't in, this is what they're looking for. They're looking for that single spike, event where we hit all the stop losses, the market finds its equilibrium state again, and then the buyers come back in and reactivate bullish. And in 2015, the market then found support along the EMA 200, basically both moving averages. You had a couple spikes down here right before the bull run that really was, we didn't look back since then. So when you look at the current situation here, you really see how bad this bear market is in. I mean, here in 2015, we found support, right, on both moving averages. Here, we're finding resistance against the EMA 200 and finding support at, in between both lines. And so, I can understand, I guess, both arguments from a bull and bear perspective as to where things are going. I mean, there's an argument to be made on both sides because we're in this kind of unknown territory in Bitcoin. And, this is what I foresee. I kind of agree with Brian as well, that the longer we spend down here, the more pressure the market is actually building, right? If you think of the market as almost like just energy, it takes energy to move the market up and it takes energy to move it down. And the longer it grows sideways, it's like energy. The more you squeeze energy into a smaller space, eventually there's going to be a huge explosion, right? Right now, we don't know if it's going to be to the upside or downside, but week after week, we are printing, positive candles. Our momentum indicators were heavily oversold. And I see this as the capitulation phase, equivalent to what happened here in 2000, the end of 2014 going into January 2015.
I'm with you on that too. And another thing that I saw that, between those two time periods.
Yeah.
One thing that I noticed is in 2015 versus today, I look at the ADX as the average directional index, and it looks a lot different. I don't have it with me right this second, but maybe you can throw it up there. If you put an ADX on there, there. If you look at the black line there, the ADX, while after the period of capitulation, it was actually kind of low, and where the orange or the red negative directional index was elevated, which is the bearish market. So there's in other words, like, oh, I lost it. Where'd it go? Oh, you moved it up to the top.
Sorry.
In 2015 there. Whoop.
Back up. I don't know if your chart's on the screen or not. I think it just might be Brian.
Yeah, I think it's just me.
Oh, sorry about that.
No problem. One thing that I look at a little different, I think it's still on me.
How is it now?
Yep, there you go.
Yeah, there we go. There we go. One thing in 2015 that I noticed was when the market came down, you had an ADX that was kind of decreasing at the time. So the black line on the indicator that you just drew was falling. At the time it broke that, and the bears are the ones that were in control, and then it kind of went into a where the directional indexes that are plotted behind the black line are kind of tangling up. So that means it's kind of going sideways, and then and moving from there. Well, actually, a little bit prior to that was the ADX was increasing while the red positive directional or the red negative directional index was also increasing. So that was bringing on a lot of bearishness. So and that's what pushed the market straight down to that moving average, and then it started to work from there. But one thing that I'm noticing now that that I like to see is that the market is showing bearishness, and this is a weekly. The daily shows it a lot better, because what the weekly is showing is that price is not moving down as the momentum looks like it's strong, and that divergence is kind of messing with it a little bit. Yeah. So that to me is a kind of a hidden bullish divergence. But on the daily, the ADX, yes, it dropped a little bit, but it's still above 20. That kind of the 20 to 30 range. And the positive directional index does not want to cross just yet down through the negative. So the positive directional index is still saying the bulls are in control. Yes, with a lot less momentum, but they're still wanting to stay in control. So as long as they're staying in control, I like that. And with the weekly showing a little bit of a little bit longer term to where the bears are starting to kind of give up a little bit. I like the daily where the positive directional index is moving to the upside. So I see it, the ADX to me is like the heartbeat of the market, and right now, if you look back in 2015, you saw that heartbeat. Well, this time the heartbeat looks a little different. So to me, if I was a doctor and I needed to check that heartbeat, I'd say, hey, we need to look at something here. Something's different than it was last time. And right now it's leaning toward the upside for me as the difference. So not to hijack your chart, but I was just like, that's one of the things I kind of noticed between the two. And it kind of goes along with what you're saying too, that it's already had its capitulation and now it's working its way as the support off that 200 exponential.
But Bobby, I have a question about the whole wicking down thing, and I've heard Tonve say this. I've heard a lot of people say this. Is it mandatory for this whole wick thing to happen, or can this thing just sort of go sideways and then shoot up from here? Do we have to see this what they consider capitulation?
So one thing I've learned from trading all these years is the market doesn't have to do anything. And the market will do what it does. And now, yes, the definition of capitulation is, ideally, if you look at certain recoveries, like look at the stock market, for example, the SPX, it capitulated, recently, and then it had this fierce V bottom recovery. And a lot of analysts will look at that as a signal that because you have such a fierce recovery, it's shown that there is that the bulls are, you know, back in the market supporting, you know, the current price action and whatnot. But you know, this whole idea that the reason why we haven't bottomed right now is because we haven't had that capitulation candle, I think is grossly misstated, because each market cycle is different, you know, and you can look back at past market cycles and get clues on where things could go, I guess. But you know, I prefer to look at this as a phase. So I've defined the capitulation as more like a capitulation phase. Like on my chart, you can see I have capitulation phase, not capitulation candle. And the way I measured this phase was simply, if you go back to the weekly here, or maybe it was, sorry. I actually defined it on the monthly chart. The phase started here. So this is, I think, a more accurate way of comparing cycles. Can you guys see my chart by chance?
Yep.
Okay. So if you're going to do a macro study, you know, looking at your monthly chart is a great way to kind of, you know, get that understanding. And I don't like this idea that a market can only rebound unless a capitulation event happens in one candle. I think phases are a better way to look at it, because it gives you more data and it gives you that emotional state of what's happening in the market. Because like Brian said, markets are driven by emotion at the end of the day, right? And so this phase, our capitulation phase in this bear market, started here, because we had month over month negative closes for 6 months, starting in August through January of this year. And that was this was a brutal time to be trading in Bitcoin, especially if you're a hodler. I mean, this was a very painful experience. This drove out, you know, people were going bankrupt, companies were going bankrupt. I mean, this was a very tough period, right, to be in. And I see this as being a phase where selling pressure is now exhausted. And bears drove the market down so fast and so fiercely that it's going to be very difficult for them to, and you know, again, I could be wrong, but I just feel like the market is finding its bottom because of this phase. And I think it's going to be very difficult for them to capitulate the market at current levels without letting prices at least rebound a little bit, like what Brian was showing earlier on his chart. You know, getting back to that kind of $6,000 to $6,300 level. And then maybe the bears put in an attack from there and drive things back down again. But, you know, when you look at like 2014, 2015, you know, yeah, the capitulation event technically happened here in December, but the big candle was here in January, where things dropped drastically in 1 week or 1 month, and, you know, then found support. But again, you know, we're kind of comparing almost apples to oranges a little bit. And, you know, that's where I think it's good to zoom out and just realize like what kind of market we're in. Just because this happened in 2015 doesn't mean it has to happen again in 2019 is my point. So.
Yeah, I was just looking at the price of Bitcoin. I'm kind of upset. I wanted it to break 4,000 while we were on the call, because I even had my whiskey ready. I don't know if you can see. Oh, it's on his screen. But
oh, sorry, hold on.
No, that's all right.
I
had my whiskey ready here to take a shot if it went to 4,000, but I'm gonna have to wait, unfortunately. So we'll wait till next time. I mean, it's still hanging around, but it just didn't get up to that 4,000 level I wanted to see. But oh well. Oh well.
Yep. Next time.
Yeah, you bet.
Just real quick, should we go into kind of more lower time frames and just talk about momentum and what we're seeing kind of on that level for more of kind of the traders that are in the now?
I'm game for anything, man. I don't care.
Do you want to pull up my chart? Or do you want to pull up your Fibonacci chart? I don't care.
You can go ahead.
All right, cool.
I didn't have it. I don't have it up here, but I'd have to find what which charts I'm looking at. I'll find one and pop it up, but you can pop yours up first.
Okay, let's see. So as Brian was saying before, I've kind of identified, can you guys see my chart okay?
Yep.
Okay. I've identified this, you know, kind of this dumb zone area that we're going back and forth on. And it's, you know, falling kind of in between two main Fibonacci levels. And, you know, it's this, the 382 extension from the December low at $3,620 to $3,930, the 618 level. You know, we've been spending a lot of time in this zone ever since we, you know, had this bearish candle here where we found resistance at the 786. And this is a very tough area to trade in, even for professionals to profit in. You know, if you're going to try to attempt to trade this tight range, I mean, you have to be looking at 15, you know, your 15-minute reports or 30-minute reports or less, and you have to be really staring at your charts and, you know, eyes wide open on top of it. And so if you're somebody who is not currently in the market and you're looking to put in some fresh buy entries, you know, I'm calling this area as kind of a dumb zone area. What's going to happen is you're going to buy in and you're going to see the market kind of go up, and then it's going to reverse, and you're either going to either keep your stop positions too early, or you're going to panic and sell out. And a lot of people are losing right now in this zone. They're getting stopped out constantly on both sides.
Yeah, that's that battlefield I was talking about. All the bodies laying around in between the two moving averages.
Right. So the way I would play it, if you currently don't have positions in the market, you want to wait for interesting prices always. That's the number one rule. And so, you know, ideally you buy at supports and you sell at resistances, right? And so right now, you know, in this kind of shorter time frame, we're seeing support, you know, at this 382 extension. We're seeing resistance at the 618, and the 618 is an imperative level. Let me get rid of this line here. The 618 extension is very important for Bitcoin to break above. In 2018, we constantly failed every single time. Every dip we took, every retracement we took to extension, we constantly failed at the 618 all of 2018. So if we break above 618 here and we confirm this as support going forward, it's going to be a very bullish price action in my viewpoint, at least in the short term. And you know, I would expect Bitcoin to start testing more interesting resistances, like at 4,400. I don't know what your thoughts are, Brian, but
yeah, I mean, I kind of look at it as, like you said, the dead zone. Anybody that's really wanting to buy Bitcoin, I'm a trend guy. I mean, anybody is that does TA, they want the trend, right? Well, we're really not in one at the moment. You know, when you take a step back, we're kind of bouncing back and forth in this range. And even though it's a few $100s here and there in the range, it could be significant depending on the size of your position. But if you're waiting to get into Bitcoin, I'm actually wanting to buy it with momentum on a break to the upside. I'd rather buy this at 4,200 with a known trend than I would buying it here at 3,800 and it drops back to 3,200 and then you're crying. So I almost want to wait until a break out of the range before I would actually buy more. Like if you're a person that wants to buy with the trend, you're waiting for a break out of this. So instead of selling on resistance and buying on support and trying to play the range, I would actually buy on a break of resistance, right. And then go from there. And then, you know, vice versa, if it goes back down and it breaks the other way, you know, just let it ride then and wick down really hard. And then you can back the truck up, beep, 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 and just fill it up with some Bitcoin. But until then, if you're doing it for a long-term hold, I think anywhere in here is a good buy, you know, for long-term, you know, 10 years from now, if you're doing it for a really long-term hold, I would buy some here anyway. You know, open a wallet and buy, even if you bought a half Bitcoin or a quarter Bitcoin, get something. If it does fall out of bed to 1,800, get another quarter if you can afford it. So, I'm in the game where I'm waiting for the trend to break out to add to my position. I am long. I bought on the 24th of December. I also bought on the next dip down because I've still liked the indicator showing bullish, but I'm not going to buy again until it breaks to the upside with momentum off that resistance. So that's kind of where I'm at on that.
Yeah, just to remind everyone, just to go back on, making. I mean, if you're a trend trader, the saying goes, right? Like make the trend your friend, right? And or the trend is your friend. And if you look at like the PSAR here, I mean, this is negative. I mean, there is, especially on the weekly here. I mean, there is no. Yes, we are making higher highs on the weekly candles, but as far as the trend goes, if you are trading currently in Bitcoin, you're buying and selling, you have to realize what kind of market we're in. And
and it's this kind of indicator that tells me that I should have protective stops, because I'm not having the, I've said it before, cautiously optimistic. I am optimistic that it is a week over week gain each week, and it's looking pretty good that way. But you got to be prepared for a possible drop, because when you do look at this, it hasn't reversed on some of these, stop and reverse signals like this. I'd love to see a nice little green circle come to be and turn this thing around a little bit, but right now it's not showing that. So you're making a good point. When you step back and look at it, this thing still is a possibility of still breaking lower, because that trend is still there when you look at it longer term.
Right. And so that's where I think you just have to decide, for yourself, whoever's listening, what kind of investor are you? Are you somebody who doesn't necessarily care about catching the absolute bottom, but you want some exposure to Bitcoin because you think maybe this is kind of a good entry price, and you're looking at it from like a 3 to 5 year kind of perspective? Is this a good place to buy? I mean, I think it'd be a hard argument to be made from that perspective, that this is not a good price to buy, right? So, but if you're like Brian and I, where you're more of like a momentum trader, like we realize right now that we're trading against the trend, and so you have to, when you kind of understand that what kind of market cycle you're in, you trade based on on that cycle. So always trade with protection, right, Brian?
Yeah, exactly. Always use protection.
Hey,
actually, there's a good question from Kurt over on the chat area.
Yeah.
What's the thoughts on LTC as a leading indicator of BTC? I think that's a good question. I actually like that sentiment, because every market's always got its kind of friend that helps push the market, and LTC over the last, I think, 4 or 5 weeks, every time LTC started making highs, BTC starting to follow. So I actually kind of like that leadership of LTC making new highs. I even tried to call that yesterday on the close. I said if LTC closed above 58 or so, it was going to be a good sign for Bitcoin. Unfortunately, it didn't. So it stayed kind of sideways. So I'm actually looking for LTC to make a good close on the daily candle to move Bitcoin with it, because I think that will push it and the bulls will start getting a little bit more fired up.
Right. And just look at the dramatic. That was a great question, by the way. And that's definitely something that I know, Paul, like we were kind of going back and forth a little bit too. Like when Ethereum was making its big move earlier, and Litecoin and Bitcoin wasn't really moving yet, and we were talking about, is Bitcoin going to launch now, right? So, just look at the dramatic difference between Litecoin and the Bitcoin chart on the weekly. I mean, just from a PSAR standpoint. I mean, this is how you make the trend your friend right here, right? When you start seeing these green dots happening, this is what we want to see the Bitcoin charts eventually look like. And I think it will, and I think that's why we're in this rounding bottom kind of recovery on Bitcoin. I think eventually we'll start printing those green dots, but we just haven't hit that point yet. But yeah,
you get the other side of the argument where Bitcoin action controls the altcoin gamblers' confidence. So you do get that other side that a lot of people think BTC actually leads LTC and not the other way around. So you get that you do have that arm wrestling match on both sides. of wondering like which one does. But I do like the action of LTC on a week over week basis the last 4 or 5 weeks to spur on a market that could actually start to actually be a leader at this point in time. Might not always be the case as we move into the future, you know, the next year or two. But there are always different segments of the market that sometimes leaders, you know, there's different time periods. And right now the LTC is trying to make a move, and that could spur on other aspects of the market. So,
I mean, what I see on the LTC chart, I actually drew this a long time ago. It's kind of funny that it's playing out. But, you know, yeah, we definitely have these kind of Elliott wave structures that are being pretty well defined on the chart right now. And, you know, you can see this doji pattern that's kind of happening on the LTC chart. So it's showing a little bit of indecision right now as far as whether the bulls can continue this momentum it's on, or is our price is going to have to kind of retrace a little bit. Now, I currently do not have LTC positions, so I'm going to be waiting as a buyer for, I want to see a pullback personally to get back into this trend. But you know, is this a good spot to be buying fresh Litecoins right now? If you don't have Litecoins, I would say no. I mean, you're buying kind of at a resistance point in the channel. You're seeing some exhaustion happening a little bit right here. It's great to see, you know, Litecoin day over day kind of hitting new highs. But from an indicator standpoint, you know, the stochastics getting a bit overbought, RSI's getting near overbought territory. So
yeah, I mean, another thing, I haven't really dove into the analysis on it, but I want to say, and don't, we'll have to go back and do some analysis on this, but I think LTC led the market in 2015, if I'm not mistaken, and then it led down in 2018. I'm going off memory, so don't quote me on all this, but it's something that we need to look out. And then doesn't Litecoin have a halving coming up or something? Yeah. So I think that right there in itself could help ignite that next bull run. Right. You know, and I don't own Litecoin, so you know, disclosure there, I'm not trying to shill anything or anything like that. So I don't even own Litecoin, and this is not financial advice, but I do like that catalyst that we could possibly have that could ignite that next bull run. So
yeah, Litecoin halving is going to be in August of this year. 150.
Okay, August. Yeah, I knew it was sometime. I couldn't remember the actual date. I'm not a Litecoin holder, so I don't really follow the news that much on LTC, but I just looked at the charts, and I just remember looking back. I think they led in 15 and in 18, both directions. Now, I'd like to see them lead again here with a bull catalyst. That'd be kind of cool.
All right. Yeah, we'll see. I personally think just looking at the daily, because I would trade this on the daily time frame personally. Yeah, I'm seeing some resistance here. I'd want to see a pullback in prices, you know, having Litecoin confirm some of these lower Fibonacci levels as support, specifically holding this bottom part of the ascending channel. You know, the problem is with these altcoins too. Now, let's just go through the scenario if Bitcoin were to capitulate, okay? And that 200-week average is being tested again. I mean, talk about you know, the hot air being let out of the balloon. I mean, you know, these altcoins pumped so dramatically in such a short period of time. If Bitcoin does reverse, you know, this is where people really have to be smart and have those protective stop losses in place to secure gains, right? Because you know, the altcoins haven't spent a lot of time, you know, confirming supports in areas. They've launched pretty dramatically. So I'd watch that out. I'd watch that from a trader standpoint as well.
Yeah, no, absolutely. That's a good point. Actually, Kurt asked another question. Ravencoin. Just a little shout out to the Digital Den again. I know we shouted out earlier. We were on there. We actually called that Ravencoin before it even started taking off with some early indication. There was about 5 or 6 of us in a group chat, and we were sharing our charts, and we were all like, you know what, this looks like it's going to take off. And we jumped in. Unfortunately, I got out a little early, But then I ended up getting back in, kind of on a second run. Got 24% gain the first time, and then I took another 67% out on the next run. So I got about, it was pretty good. So just another little shout out to the Digital Den on Ravencoin. And then I put that little chart out there where it hit the 61.8% level right on, and then it just dove on a nice correction after that on Ravencoin. And we call it call as it was falling down, but it was a nice little rebuy on the back on the next leg up. So he was just talking about Ravencoin. I just wanted to shoot that out there. We enjoyed that nice little move.
And Brian, I think you might have to do a shot because Lyndon Morgan there said that BTC broke 4K on Bitfinex. So.
I was looking at it on Binance.
So I guess it depends on what pricing source we're using, but
so it's maybe a little sip.
What are you guys' thoughts, real quick, on now that we kind of covered Bitcoin and where we're seeing the short term, at least short term perspective, where that support and resistance levels are at. How about XRP, man? What a disappointment this has been, right? After especially Coinbase listing, and what are you guys' thoughts on XRP and that whole situation?
I mean, as a technical analyst,
yeah,
that chart is a piece of shit.
My charting is a piece of shit, or the coin?
No.
Okay.
Not your charting, just the price chart in itself. Yeah. Like bring back the history on that thing.
You want me to pull like a weekly or something?
Yeah, I mean, that is just death.
Right.
I mean, that's a terrible, terrible chart. So you got, I mean, I wouldn't touch that thing with a 10-foot pole from a technical standpoint right now. Not in a million years.
All right.
But that's just me when I first visualize it as a technical analyst eyeball. Now, fundamentally, can they come out with cool news that could bring some emotion into it and get the XRP army involved and get in there and buy more? Yeah, I could see that happening. Right. And it could definitely, wick up and get that nice little spike. But you're going to have to spike a lot to get this thing rocking and rolling again. So TA wise, I don't like it at all. As you can tell, I was kind of being blunt.
I really thought,
ugly.
I really thought the Coinbase effect was going to take hold on this market. And I don't know. Because if you look at like ZRX, which is a really it's a decentralized exchange, but when they listed on Coinbase, it was insane. And I was in this move. Here, let me get rid of some of this. I was in this candle here, and it spiked almost 100%. So it listed, this is week one, it listed, it had a kind of just a mediocre listing, right? Nothing really going on. And then week two, it just flew off the rails, and I got lucky, and I was in this move. I got out.
Same kind of thing, man. It's like, 0x and XRP, they might have really good ideas, and they're getting good use cases and all of that behind the scenes. I think 0x is great from what they're doing with decentralized exchanges and all that kind of stuff. But from a technical standpoint, those charts are crap. I wouldn't touch them.
It's hard to read. So, especially
they're just not anything from a TA perspective. But if you want to hold them long term because you believe in what they're going to do in the years come, yeah, that's fine. I actually own 0x as a long term hold because I like decentralized exchanges. I like what they're doing, but I'm not trading it off this chart by any means. It's just a long term hold because I bought way back when, and I've just been kind of holding it since then. Everybody's got their bags that are a little lighter than what they. I mean, not lighter as in numbers of coins. It's lighter as in the amount of amount of what those coins are worth. But technically, I just don't like those charts at all. They scare me.
Yeah, it's especially when that's the thing I like about Bitcoin. When you pull up the history, because it's been around for 10 years, you can really identify historical supports, right, pretty easily. Like if Bitcoin were to capitulate, let's say, like we can say, all right, this is a support zone. If you're not looking at Fibonacci, that's a support zone, right? Like all these major dips, you can go back and see them pretty easily.
Mm-hmm.
and it makes sense. But when you look at a coin like XRP, I mean, there's a lot of error back to zero, right? I mean, there's this. I guess there's this zone here, like around 24 cents. And I'm just looking at major kind of pullbacks where the coin found support.
Yeah, all I see is from the very high that it was at the beginning of 18 there.
Yeah.
And then higher or lower highs, lower highs, lower highs,
right.
lower highs, lower highs. Terrible.
Yeah.
So that's the only reason I don't like it. But until they start to break out to a new high from the previous high, I just don't, I can't even look at it.
Paul, what do you think of the fundamentals? I mean, do you follow Ripple and the XRP situation, and do you have a better understanding why there's so much controversy kind of around? I just look at it from a trader standpoint mostly, but
yeah, the other thing is, again, you know, everybody's out there, and there's definitely the two camps. There's no middle ground. There's nobody that's like, well, maybe. Everybody's like, I either love Ripple or I hate Ripple, right? So the fundamentals behind it is that, and I believe this because I've been watching this for probably since it started. You know, Brian has said several times that they're playing the long game. They're not about the short game. And what people are going to miss on Ripple is, and again, this is not from that. I'm not trying to shill Ripple anybody. I'm just being factual. They are playing a long game. It doesn't matter today if it's doing anything or not. Can they continue to execute? And eventually, will you see a mass amount of banks using XRP to move money across? Maybe. Now, I'm not foolish enough to go, Bitcoin's going to go $10. Why? Because the market cap would be ridiculous. It's almost impossible for something like that to happen. So I say this. When you look at what they're doing and how they're executing, and they are, in fact, getting banks not only to trial XRP, they're using XRP today. So it's going to be tricky to see where they ultimately come out. What it's going to do for the price, I haven't been able to make a decision on that. If a bunch of banks begin to actually use and buy up XRP to move money, will that have an impact? Possibly. You know, how much are they selling of XRP on a monthly basis? There is a report that comes out, and I haven't seen it recently, but there's a report that comes out. They are supposed to technically release 1 billion XRP in per month. And so are they selling all that billion? I haven't heard a report saying they've sold all billion every month. So.
Okay. Interesting. Yeah, it's definitely a controversial coin, right?
Yeah. Lyndon asked about Tron, but right before Lyndon, I just wanted to give a little half shot to Bitfinex for Lyndon. So this is to you, guy. Thanks for the bullpen last night. It was fun.
Nice.
Awesome.
That was for Lyndon.
Wow, no chaser.
4,000 on Bitfinex.
I know, man. Wow, that's rough.
I thought you were going to need a chaser for that, but I guess not.
I live in Kentucky. Bourbon's like water.
Gosh. Ugh. No, thank you.
So here's the Tron report. This is a macro picture. We're looking at the weekly, and I'm going to say Tron was, man. So before Litecoin moved, actually, Tron was the big mover and shaker. You know, in the top 10, and it really, I mean, it started consolidating in November. So in these candles here, this is where Bitcoin really capitulated. And Tron actually was trading kind of sideways and finding support, kind of range trading when the rest of the market was just falling apart. And Tron was actually the first mover in the top 10 to reestablish, you know, that bullish conviction in the market. Obviously, there was a lot of kind of just back and forth between him and Vitalik, you know, in terms of you know, who had the better, I guess, blockchain and et cetera. But from a technical perspective, Tron, yeah, definitely, you know, led the market in a bullish way. Now we're finding some real resistance here, and I think if we pull up the moving averages real quick, we'll kind of see what the major ones are. So okay, this is interesting. So it broke through. Whoops, sorry about that. It broke through the 200-day moving average, which is incredibly bullish price action. I mean, any asset, and I'm sure Brian would agree, any asset that drops below its 200-day and then moves back above its 200-day moving average and then finds support on that average, I mean, that's a very bullish price action and indication that the market bottom could be in for Tron. Now, Altcoin does control things, and to some degree, you know, you can't say that the bottom is for sure in. But if this was Bitcoin, like if this was the Bitcoin chart, and we saw Bitcoin breaking through its 200-day like this and then finding support, all of us would be calling, or at least a lot of us would be calling that the bottom is in, right? But being this is Tron, you know, I'd be careful right now in this range. You know, we're seeing, obviously on the daily chart here, on the PSAR, we're seeing, you know, some negative momentum that's happening. You know, so the trend is kind of down and against Tron right now. So as a buyer, I don't own Tron, but if I was looking for fresh buys, I'd give this market some extra time to kind of figure out this range. That
let me show my chart real quick.
Okay.
Let's see if I can pull that.
While you're showing that chart too, I just did pull up a report that came out. Ripple sold $535 million worth of XRP in 2018. And it said that in Q4 of 2018, 3 billion XRP was again released out of escrow, 1 billion each month. 2.4 billion XRP was returned and subsequently put into new escrow contracts. The remaining 600 million XRP not returned to escrow is being used in a variety of ways to help support the XRP ecosystem, including the RippleNet Accelerator Program and Xspring investments like Securitize.
Interesting.
I'll put that in the chat.
Yeah, no, that's good. That's good. Yeah,
we're looking at your chart now.
Oh, you can see the chart?
Yep.
Cool. Ignore all of this down here because we'll probably have the guy that created those indicators on one day so you can explain it to us. Because I would do a really, really terrible job. But main thing is I wanted to look at these moving averages. I followed the Fibonacci averages, the 813, 2155, and 89. All these first three, the 813 and 21, all crossing down through the 55 and still working their way down to this 89. That kind of scares me a little bit. So this has got a lot of bearishness to it in here. The RSI is still, you know, has some room to run before it starts to get into really oversold conditions. So I'd be a little nervous there. And then throwing up just the Fibonacci just off the low and the high here, you got a 61.8% around this level. So you got a little bit of room to run down here, and it makes me a little nervous. So if you are looking to buy it, you know, I'd still kind of ride this trend down a little bit and kind of keep a mental trigger around this level, and then weigh what's going on once we get there, and see if you want Tron or not. But not financial advice, but follow that trend because it's not looking real good at the moment.
Right. Yeah, this looks a lot different than the Litecoin chart in that, you know, Litecoin obviously had that similar kind of parabolic move to it. Do you mind just pulling up that chart real quick?
Which one?
The Tron report.
Oh, the one I just had?
Yeah.
Sorry, I thought you were going to pull something up. There we go.
So, you know, Litecoin had that kind of similar bullish, you know, parabolic run all the way to the top. Now, what's different, though, is Tron, you're seeing this, you know, double top kind of bounce. And this is more than just profit taking in my eyes. So with a typical profit taking price action, you know, you see the prices retracing. Like in this case, maybe it retraces back to like the 382 extension and finds support there, and then it reactivates bullish. But Tron is continuing to break below, you know, further deeper into the Fibonacci scales. So as a buyer, I'd be really keen on just seeing how Tron handles this 618 kind of price level. And, you know, I'd be waiting for, I guess, further prices, you know, maybe even all the way down to the 786 retracement and, you know, seeing how the market handles those areas of the chart personally. Yeah,
no, that's why I said, like, if it gets down to this level, let's reevaluate a little bit because momentum could start to get really strong. I don't have my ADX up here at the moment, but I'm pretty sure, you know, if I can find it, I'm pretty sure the ADX right here,
Yep.
increasing on a bearish move. So you got building momentum on a day over day basis on this indicator. So that in itself is saying, you know, you're more likely to see selling into any type of rally attempt. So I think it's going to still move to the downside.
You know what's kind of interesting though, as well, is on the RSI. I'm wondering if we'll see a double bounce maybe on the oversold level. I mean, you can't play that as a trader, but it'll be kind of interesting to see on the RSI when the RSI hits 30 here, if it reactivates, you know, bullish.
Yeah, because I mean, last time it was down here, hitting those lows. This is when the momentum indication said we're going bullish, people. So you were getting into oversold conditions at a time it wanted to go bullish,
right?
And then it just took freaking straight up as the momentum. But now it's kind of switched directions to where it could push itself into oversold conditions, and of course you can stay in oversold conditions for a while, like it was down here.
Yep. And
as the market just kept going down and down, so as the momentum for the ADX is increasing, so that's why all of that together. If you want to buy Tron, if you're going to do it here, have some tight stops for sure. I wouldn't advise that, but just tight stops if you do.
Yeah.
Hope that was helpful for you there, Lyndon.
He said he didn't trade it anyway.
But he's probably looking to maybe buy
it. Possibly.
Cool.
So,
all right. Well, how much we into this thing?
Yeah, you know, are we 90 minutes in almost?
Yeah, we're an hour and a half. Yeah.
Yeah. Hey, it's our first one. We got to figure out what works, what doesn't. You know.
We'll figure out our flow and get a little bit more concise, I think, as we go. So, anyway, so yeah, I guess thanks for watching, and for those of you that are going to be watching the recording, this is, you know, I think we've put out on a fundamental basis. Paul put out, you know, what the supports are and the resistance kind of things that are happening on the news level. Brian and I went through the charts, you know, identifying both on a macro level where the supports and resistance are, as well as, you know, kind of the shorter time frames if you are a trader, what things to kind of look out for. And yeah, that's the show. We appreciate everyone watching, and we're going to try to do this, I think, on a weekly basis, right, guys? Is that the plan?
That's right. That's the plan.
So,
wait! Before we leave, we got to make a prediction. What do we see? What do we see Monday morning?
Ooh, nice. Yes.
Let's get off the air with a little bit of a guess, right? Or an educated guess, because we're all professionals here.
Well, you go.
I say 4,200 by Monday.
Ooh.
I'm gonna stick it out there. Screw it, 4,200. Let's go.
Well,
give me Monday by 6 o'clock p.m. Eastern time.
I'm going to say if we're going to go 4,200, we're definitely going to go 4,400 because
yeah, I think so too. But I'm just talking about my Monday.
No, what I see happening though is I see that ascending triangle that's forming on the that's really forming nicely on the 4-hour chart. So I'm expecting in the next 24 hours for there to be a breakout. Us testing, you know, above 4,000, going to 4,200, finding maybe some resistance there over the weekend, and then I'm looking for a breakout to 4,004. So I'm going to be super specific.
All right, no, that's fine. That's fine.
Yeah.
Now we got to get the real call, Paul. What do you think on Monday?
Well, you know, if you're asking me,
do you support or do you resist us?
I resist you guys this time, unfortunately, and I'm never normally on this side of the call, but
it's fine. It's fine.
I'm gonna resist. I'm gonna say I don't know. I think we're just stuck. I mean, there's nothing to move us unless there's some bullish news that comes out between now and Monday. I think we stay where we are at best. Maybe move a little bit lower, but that's about it.
Yeah, I can see that. You probably got a high probability that's probably going to be right. But I'm sticking my throat out. I'm sticking it out there. 4,200.
Okay.
We'll see next week on who that winner will be.
Sounds good. All right, I think we'll wrap it up. Thanks for watching, everyone, and catch us on the next one. We'll shoot out a Twitter or a tweet early next week when the next episode is going to air. So thanks for watching.
All right. Thanks all.
All right,
Peace
bye.
out.
Peace out.